while ordinary Americans are paying higher taxes than ever before, watching their paychecks shrink and their retirement accounts struggle to keep pace with inflation. A select group of billionaires and multinational corporations have discovered a way to not only avoid paying taxes, but actually profit from the tax system itself. And the mechanism they're using is something that most people believe was created to save the environment. Carbon credits, which have quietly become the most sophisticated tax shelter ever devised. What started in the late 1990s as a well-intentioned market-based solution to reduce greenhouse gas emissions has transformed into a multi-billion-dollar industry that allows the wealthiest individuals and largest corporations on the planet to claim massive tax deductions, generate tradable assets worth hundreds of millions of dollars, and receive government subsidies, all while doing absolutely nothing to reduce their actual carbon footprint or environmental impact. This isn't conspiracy theory or speculation. This is documented reality happening right now, with companies buying up vast tracts of land in developing countries, claiming carbon credits for forests that were never going to be cut down anyway, then selling those credits to polluters who use them to offset emissions they have no intention of reducing, while the entire scheme is subsidized by taxpayers and blessed by governments desperate to appear conscious without actually requiring anyone to change their behavior. To understand how carbon credits became this perfect tax shelter, you need to go back to 1997 and the Kyoto Protocol, an international agreement designed to address climate change by setting binding emission reduction targets for developed countries. And the mechanism chosen to achieve these reductions was cap and trade, where governments would set a limit on total emissions, issue permits, or credits, representing the right to emit a certain amount of carbon dioxide and allow these credits to be bought and sold in a market. The theory sounded elegant and economically efficient. Companies that could reduce emissions cheaply would do so and sell their excess credits to companies where reductions were more expensive, creating financial incentives for emission reductions to happen wherever they were most cost effective, and the total amount of emissions would decline because the cap would be progressively tightened over time. But like most theories that involve creating new financial instruments and markets, the reality turned out to be vastly different from the promise. Because once you create something that can be bought and sold and used for tax purposes, financial engineers and tax attorneys immediately start figuring out how to game the system. And when the amounts involved run into billions of dollars, gaming the system becomes extremely profitable. The first major problem with carbon credits emerged almost immediately. The question of what activities could generate credits. And this is where things get truly absurd, because under the rules that were eventually established, you could receive carbon credits not just for reducing emissions, but for avoiding emissions that might have happened in some hypothetical alternative scenario. This concept, known as additionality, means that a company can claim credit for not doing something they probably weren't going to do. Anyway, and proving whether a forest would have been cut down or a coal plant would have been built requires speculating about a future that, by definition, can never be verified. So what happened was exactly what you would expect. Companies and investors started identifying the easiest possible claims, buying land that was already forested and had no immediate threat of deforestation, declaring that they were protecting these forests from being cut down and generating millions of carbon credits that could be sold to corporations in developed countries who needed to offset their emissions. The buyers get to claim they're carbon neutral, the sellers make enormous profits, governments get to claim their climate policies are working, and absolutely nothing has actually changed about the total amount of carbon dioxide being emitted into the atmosphere. But the tax advantages are where this scheme really becomes extraordinary, because in many jurisdictions, including the United States, carbon credits are treated as property, which means they can be donated to charitable foundations for full market value tax deductions, used as collateral for loans, depreciated over time, and transferred between entities in ways that generate tax losses while maintaining economic value. A billionaire can purchase degraded land in Brazil or Indonesia for a few $1,000,000, implement a reforestation project, or simply declare existing forest as protected, claim carbon credits worth hundreds of millions of dollars based on speculative calculations about how much carbon will be sequestered over the next 50 or 100 years. Donate some of those credits to their own charitable foundation and take a massive tax deduction. Sell other credits to corporations that need offsets, and still retain ownership of the land, which may appreciate substantially in value. The entire transaction generates tax benefits far exceeding the initial investment, creates tradable assets that can be monetized multiple times, and costs taxpayers billions in foregone tax revenue, all while being celebrated as environmental philanthropy and corporate responsibility. Think about what this means for a moment. The wealthiest people and most profitable corporations, who have the resources to hire teams of accountants and lawyers to minimize their tax obligations, have been handed a system where they can invest in assets that generate immediate tax deductions, create ongoing income streams, appreciate in value, and earn them praise as environmental saviors, all subsidized by ordinary taxpayers who are paying higher effective tax rates because someone has to make up for the revenue lost to these sophisticated shelters. Does this sound like a system designed to address climate change? Or does it sound like a system designed to allow the wealthy to avoid taxes while appearing virtuous? And if you're starting to feel that familiar anger rising as you realize you're being played yet, again, you're exactly right, because this is how every modern tax shelter works, taking something that sounds beneficial and warping it into a mechanism for wealth transfer from the many to the few. The carbon credit market has exploded over the past decade, growing from virtually nothing in the early 2000s to a market worth over $200 billion today. And this growth has been driven not by genuine emission reductions, but by the proliferation of credits from projects of dubious environmental value. Investigations by journalists and researchers have found that the vast majority of forest protection credits, which make up a huge portion of the voluntary carbon market, are worthless. Protecting forests that were never actually threatened or overcounting the carbon sequestration benefits by using wildly optimistic assumptions about how much carbon the trees will absorb. One study found that more than 90% of rainforest carbon credits used by major corporations are likely phantom credits that don't represent real emission reductions, which means that companies are claiming to be carbon neutral while continuing to emit exactly as much as before. And the credits they're buying to offset those emissions don't actually represent any real environmental benefit. If you're feeling disturbed by how blatant this fraud is, if you're wondering how this can possibly be legal, then you need to understand what's coming next, because the carbon credit scheme is about to get much bigger and much worse. Subscribe now, because what we reveal next will show you exactly how this system is being expanded to control not just industrial emissions, but individual behavior and consumption. The sophistication of carbon credit tax shelters has reached levels that would make even the most creative offshore tax haven operators envious, because the structures being used combine multiple tax advantages into single transactions that generate benefits far exceeding any actual environmental impact. Here's how a typical sophisticated carbon credit tax shelter works. A billionaire or a private equity fund identifies a large tract of forest land in a developing country where land prices are low and environmental regulations are weak. They purchase the land through a complex web of offshore entities designed to minimize taxes and maximize flexibility. They engage consultants to produce studies claiming that the forest would have been destroyed for agriculture or logging without their intervention. They register the project with one of the voluntary carbon credit certification bodies that have been set up to provide legitimacy to the market. They receive credits based on speculative calculations about how much carbon will be sequestered over decades. They donate a portion of the credits to charitable foundations they control and take immediate tax deductions based on the purported market value of those credits. They sell other credits to corporations seeking to offset emissions and use the proceeds to fund additional land purchases. And they retain ownership of the underlying land, which often appreciates substantially as carbon markets expand. Each step generates tax benefits. Each entity in the structure serves a purpose in minimizing tax liability or maximizing financial flexibility. And the cumulative effect is that the initial investment generates returns of 500% or more when you account for all the tax savings, carbon credit, sales, and land appreciation. But here's where it gets even more disturbing, because the largest buyers of these carbon credits are often the very companies that are most responsible for environmental destruction. Oil companies buying credits to claim their fossil fuel extraction is carbon neutral. Airlines purchasing offsets so they can advertise guilt-free flying. Tech companies buying credits to power their massive data centers while claiming to be green. And what all of these companies have in common is that buying carbon credits is far cheaper than actually reducing their emissions, which means the entire system is designed to allow continued pollution while creating the appearance of climate action. The math is simple and brutal. If it costs a company $100 per ton to actually reduce their carbon emissions through efficiency improvements or renewable energy, but they can buy carbon credits for $10 per ton, they will always choose to buy the credits. And the more companies make this economically rational choice, the the more the carbon credit market grows, creating more opportunities for sophisticated investors to generate profits and tax benefits from projects that don't actually reduce global emissions. The role of governments in enabling this system cannot be overstated, because carbon credits only have value because governments have created regulatory frameworks that recognize them, tax codes that provide deductions for them, and subsidies that support the industries producing them. In the United States, conservation easements that incorporate carbon value of the development rights being forgone, which creates massive incentives for inflated appraisals and questionable claims about what development would have occurred. The IRS has been cracking down on some of the most egregious conservation easement abuses, but the carbon credit market is evolving faster than regulators can respond, with new structures and jurisdictions being used to stay ahead of enforcement. Meanwhile, governments around the world are expanding carbon credit systems, creating new categories of activities that can generate credits, and providing subsidies and guarantees that reduce risk for investors, all of which serves to entrench a system that benefits the wealthy while doing little to address the underlying environmental problems it purports to. What makes carbon credits the perfect modern tax shelter is that they combine tax avoidance with moral authority, because anyone who questions the system can be dismissed as opposing climate action, as supporting pollution, as being on the wrong side of history, which means that legitimate criticism of how carbon markets actually function gets conflated with climate change denial and marginalized in public discourse. This is genius from the perspective of those benefiting from the system, because they've created a structure where financial self-interest is cloaked in environmental virtue, where calling out the tax avoidance makes you seem like you don't care about the planet, where the massive wealth transfer from taxpayers to sophisticated investors happens behind a shield of moral righteousness that makes criticism politically difficult. How many times have you heard corporations praised for their carbon neutrality commitments, their renewable energy pledges, their forests, conservation initiatives, without anyone mentioning that these commitments are being met primarily through carbon credits of dubious value that also generate enormous tax benefits, and that the actual emissions from these corporations continue to rise? The international dimension of carbon credit tax shelters adds yet another layer of complexity and opacity, because the land being purchased and the credits being generated are often in countries with weak governance, limited environmental enforcement, and substantial corruption, which means that verifying whether forests are actually being protected or carbon is actually being sequestered is nearly impossible. Reports have documented cases where the same forest land has been used to generate credits for multiple different projects, where indigenous communities have been displaced from land they've inhabited for generations, so that credits can be claimed by foreign investors, where projects claimed to be preventing deforestation are actually protecting forests that were already in national parks or other protected areas where cutting was illegal anyway. The voluntary nature of most carbon credit markets means there's no meaningful enforcement, no serious penalties for fraud, no mechanism to ensure that credits represent real environmental benefits, and the certification bodies that are supposed to verify project legitimacy have obvious conflicts of interest because they're paid by the project developers seeking certification. What would you do if you discovered that something being sold to you as the solution to one of humanity's greatest challenges was actually a sophisticated financial scam that enriches billionaires while doing nothing to solve the problem, and maybe even making it worse by creating the illusion of action? This isn't a hypothetical question. This is the reality of carbon credit markets, where the appearance of climate action substitutes for actual emission reductions, where financial engineering replaces genuine environmental protection, where the wealthy use climate concern as justification for elaborate tax avoidance schemes that cost the public billions in foregone revenue. The people who designed this system knew exactly what they were doing. They understood that creating new financial instruments around environmental protection would attract capital and generate profits. They knew that tax advantages would drive adoption far more effectively than genuine environmental concern. They calculated that the complexity of carbon markets would prevent most people from understanding what was really happening. And they were right on all counts. The expansion of carbon credit systems into new areas should terrify anyone who values freedom and transparency, because the same logic being applied to industrial emissions is now being extended to agriculture, forestry, land use, and even individual consumption, with proposals for personal carbon allowances that would track and limit individual carbon footprints. What starts as a market mechanism for large corporations becomes a system of social control when extended to cover all economic activity And the infrastructure being built to track and trade carbon credits is the same infrastructure that could be used to monitor and restrict personal behavior. Every purchase could be assigned a carbon value. Every action could be tracked against a personal allowance. Every trip or meal or product could be approved or denied based on its carbon impact. And the wealthy will of course be able to buy their way out of any restrictions by purchasing credits, while ordinary people face real limits on their choices and freedoms. This isn't dystopian speculation. This is where the logic of carbon markets inevitably leads. And the enthusiastic support from billionaires and tech companies for these systems should tell you everything. You need to know about who benefits and who pays. The historical parallel to carbon credits is the medieval practice of selling indulgences, where the Catholic Church allowed wealthy sinners to purchase forgiveness for their sins rather than actually changing their behavior. And the comparison is almost too perfect because carbon credits function exactly like modern indulgences, allowing wealthy polluters to purchase moral absolution rather than reducing their harmful activities. The church eventually recognized that selling indulgences corrupted its mission and undermined genuine moral reform. But it took a Protestant Reformation and centuries of conflict before the practice ended. And we should ask ourselves what it will take for society to recognize that carbon credits similarly corrupt the mission of environmental protection and undermine genuine efforts to address climate change. The answer is probably that as long as powerful interests profit from the current system, as long as governments find it politically easier to endorse carbon markets than to require actual emission reductions, as long as the public remains confused about what carbon credits actually represent, the system will continue and probably expand, with the costs being borne by ordinary taxpayers and the environment, while the benefits flow to investors who understand how to exploit the system. So Eddie, we are watching as carbon credits transform from an environmental policy tool into the most lucrative tax shelter of the 21st century, and the people who should be outraged. The environmental activists and progressive politicians who claim to care about both climate change and tax fairness are often the loudest supporters of carbon markets because they've been convinced that any climate policy is better than no climate policy. This is exactly wrong, because bad climate policy that enriches the wealthy while failing to reduce emissions is worse than no policy, because it creates the illusion of progress while actually preventing real action, because it channels money and political energy into a system that benefits wealthy investors rather than into genuine solutions. The carbon credit scheme reveals something fundamental about how power operates in modern society, how noble-sounding initiatives get captured by financial interests and transformed into wealth extraction mechanisms, how complexity and moral authority are used to prevent scrutiny, how the same people who broke the system profit from selling you the supposed fix. If this is posé av. Carbon credit tax shelters has opened your eyes to how environmental concern is being weaponized to justify wealth transfer from ordinary people to billionaires. If you're starting to see the pattern of how every crisis or challenge becomes an opportunity for the wealthy to design systems that benefit themselves while claiming to serve the public good. If you're angry that you're paying higher taxes while sophisticated investors use environmental protection as justification for massive tax avoidance, then you need to see what we reveal next. Because carbon credits are just one example of a much larger pattern where financial instruments are created around social problems, and understanding that pattern is essential to recognizing and resisting the next scheme. Subscribe now and prepare to discover how the same playbook used for carbon credits is being applied to social impact bonds, ESG investing, and other mechanisms that promise to solve social problems while actually enriching investors and expanding control over your life. Because once you see how this works, you can never unsee it. And that knowledge is your only defense against being exploited by the next supposedly virtuous financial innovation that's actually a sophisticated wealth extraction scheme.